Welcome back, and joining us now is Harshal Barot. He's senior consultant at Metal Focus. Harshal, thank you so much for joining us. And I want to talk about the volatility that we've seen in case of the gold prices. You know, this movement from 1900 to 2080 of an all-time highs and then falling all the way to 1920 and then 2000 in the New York markets yesterday. I mean, the gold prices really seem to be behaving like, a very volatile stock, if I can say that. How are you, first of all, reading this volatility?
So, Manisha, as you rightly pointed out, there has been a lot of volatility in the markets, and this, according to me, purely reflects, how market expectations are changing rapidly every day. So, from a point where markets were expecting almost 100 basis points of rate cuts, starting second half of 2023. Now we are down to just 50 basis points of rate cuts that the market expects over the next 8 to 9 months. So that obviously that has reflected in the correction that we've seen in the gold price. And the other thing is that very recent commentary from some of the Fed members, they are suggesting that the Fed might keep a rate hike in June. So we've also seen quite a bit of volatility in terms of rate expectations in the next meeting of the Fed. So from probably expecting more than a 60% chance of a rate hike, now markets are factoring in another just a 25% possibility of a June rate hike. So given that we have very conflicting macro triggers at the moment, at the one hand there is definitely some of the US data suggesting that the economy is slowing down. But on the one hand, the sticking point for the markets has been U.S. labor market. And in that sense, the proof that we are getting from the continuing claims data, the private sector payroll data, that still suggests that the labor market remains very, very strong. So I think the next focus now obviously shifts to the non-farm payroll data that we are going to see this evening. And in a sense, volatility probably will continue in the short term.
Oh, well, absolutely. 1980 at the last count right now, with a lot of people still suggesting that the correction is not done. Another leg down perhaps is a possibility. But Harshal, another important point is the central bank buying, and that has been a big supporting pillar for the gold bulls until now. Last year was great. The first quarter of this was nice. We even saw the month of April on a positive note here. May has just ended, but any initial cues that you have seen? Because it's not just the buying. Some of the central banks actually have sold some gold also.
Yes, exactly. As you rightly point out, Manisha, in terms of the buying figures for May, I think the IMF has still not come out with those figures. But from what we see is that, the Turkey Central Bank has been selling very aggressively, even in April and even in May, in the run-up to the elections. We've seen quite a bit of selling coming from the Turkey Central Bank. So by all indications, what we could see is probably a very flat sort of number for May as well. So in that sense, that support to the price is a little low at the moment. We might see a bit further price correction. We might see that picking up in the later months. But over the past couple of months, that has also showed signs of slowing down.
Until the time in this year, the Indian physical buying also has not been very supportive with the kind of volatile price moves and the all-time highs that we saw coming for gold as well. How is the trend outside of India? What is the investment buying looking like right now?
So, Manisha, outside India, I think retail investment buying definitely continues to remain strong. Investment markets in the Middle East, especially within the Middle East, there are concerns in certain countries like Turkey, Iran, Egypt, all of these countries that they continue to see a lot of physical buying at the retail level. In the institutional front as well, I think if you look at the CFTC data, there's not been much of selling happening there as well. Yes, we've seen some profit taking, but they've not done bearish outright as of now. And even in India, I think from what I speak to my contacts, with the price fall, definitely there is some element of buying that has come back into the market.
Harshal, also talk to you about the price range itself then. Metal Focus clearly hasn't been very bullish for gold prices for this year. With the kind of range that we've done already, how is the current quarter and the second half of this year looking to you?
So, Manisha, as you said, Metal Focus still remains, moderately bearish on the price, if I would put it that way. So we still see correction happening in the second half of this year. Prices falling closer to $1,800, and we continue to stay with that view. I think, the market expectations of rate cuts are still very, very optimistic. So I think there is a lot of repricing still to happen there. And the other fact is that given that even the Fed members have now suggested that, it's not done, rate hikes are not yet done. Maybe they defer it to July. But the fact that there are still possibilities that rates may not start to come down very soon, I think that could be a negative trigger for the market.
All right. Harshal, a final word on silver as well, because with the metal prices rising in this week, silver also seems to have seen some support. We did see $22 on the lower side, almost there, and 24 is back on the screens right now. How is this industrial and some precious metal looking to you now?
So, Manisha, over the past month or so, I think silver is definitely taking more triggers from the base metals complex. We've seen a lot of selling pressure coming in the base metal complex because there are concerns about a slowdown in China. Expectation of a U.S. recession has also not gone completely away. I think the market still expects sort of a 65% probability of a U.S. recession. So in that sense, because it's also sensitive to what is happening in the industrial complex, I think silver has seen, quite a bit of volatility as well, and at times it's seen more decline compared to gold. But from a fundamental perspective, I think, from the demand-supply fundamentals perspective, silver is still relatively better placed compared to gold. So in an event where, if gold stages a turnaround, I think silver will definitely tend to outperform. And if gold continues to sell off as we expect in the second half of the year, silver on the downside also tends to do a bit more compared to gold. So in that sense, yes, our view is bearish, but in the short term, I think it would continue to take triggers from industrial metals.
Okay, all right, Harshal and Manisha, thanks a lot for joining in and giving us a quick update on what's happening in the world of commodities. Let's slip into a short break. On the other side, we'll get you more on the markets and stock-specific action. Stay tuned.